All right, December 5th, live trading. Didn't do a live screen recording. I'm just going to do a quick recap. Today was rough for me at the start because I was stuck on the idea of the earlier range after the uptrend. We had this range overnight gap, as you can see right here, from here to here, which anytime we have a gap after a test of the range extreme and then we go up and retest it right after a gap, that usually tells me that the range is no longer valid and we're going to break out. We had a nice little uptrend and then we had a break new high and held range extreme or range supply, came up and created a new high and also created the support or demand of this new range. This is what I got stuck on. We had another gap after an extreme, and we came up to retest and we passed. Usually after a gap like this, I like to start a trend line just to see if it will work in the future. Becomes invalidated, then I'll erase it. Second entry long right here. Beautiful second entry long. But usually when you see gaps, be a little wary, and especially if it's late in a range, the range has been bouncing. It usually indicates a range failure coming up, and the trend usually starts on the pivot of the range failure. So right here you can see we trended up, we continued back into the range. But this is where you can get in trouble too. So if you have a range that fails drastically, right? Don't hold on to the idea of this range being the entire day's range, because I had it here and then I even dropped it down to here to see if it would validate the next portion of price action. So I had it, if you see the cursor's line, I had the support or demand starting right here. And I also had the supply or resistance all the way up here. So I saw a gap right here, another big gap right here. So I was assuming we were going to start just trending lower. But no, it's just a different range. So lesson of the day is once a range becomes invalidated by a gap and an explosion out, even if it comes back into the range, right? Expect a new range to form if it is in fact a range day. After this, you should be expecting a break and a new low, which we got, right? Which makes this second entry short super appealing. Off of this second entry short, we also formed the range supply extreme, right? For this new range. And then from this pivot, this is an important candle right here, because this pivot ended this downtrend, created this uptrend out, so the correction out of the downtrend, and created a range extreme demand, right? So this candle also just happens to be after a range invalidation, a completion of a downtrend, and the expected new low. So this is your pivot candle. This is the reset candle. From this candle on, as well as this candle with the gap, they create new market cycles. So look for your pivot candles. Don't be afraid to make new ranges. So I mean, look at what it looks like without any of the levels, right? What the heck is going on here? You're just going to look for a massive range, you know? Something like here would be the bottom of the range. Something like here would be the top of the range, which is a pretty good range, right? But for short movements and confident scalps, you need a smaller time frame of reference. Anyways, let's go over today's setups, and we will go from 8 o'clock on because I didn't get behind the computer until 8 o'clock. So basically, downtrend completed off of this pivot point. You can't go long off of this break just yet, no matter how appealing this uptrend might look, because we still need a new low off of this downtrend. So you're looking for second entry shorts or failed second entry longs. After this uptrend created a new high, so we had a break right here, and then we had a new high after that. So now we can start looking short and looking for good entries. So from this pivot, we have a first entry short and then come up, and then we have a second entry short. Pretty decent signal bar, which would be this one. And the thing that I like about it is we created a micro resistance, which also just so happens to be the supply extreme high. And we rejected it and then ended up dumping all the way to the bottom to create a range extreme low. After we dipped past this horizontal line where my cursor is going across, you can start thinking long, because range rules are most breakouts fail. We break out of the range, and then you're looking for a higher low confirmation so that you can go long. This is the new low of this downtrend. So from here, we have a second entry long with a higher low confirmation. As you can see off this pivot, we have first entry long, second entry long. We broke out of this uptrend, created a new high. So from this new high, you can start thinking short. From this new high, we also created a micro range within the range, aka consolidation. So this whole time in this congestion, you're looking for opportunities to go short. I'm looking for failed second entry longs, because just because we created a new high doesn't mean we might go test the extremes of this supply, right? So I'd rather see the attempt to go higher and fail rather than just taking a second entry short, which you could have taken. So basically, first entry short, second entry short right here off of EMA and off of test of the support of the consolidation and EMA. So this is a good second entry short. The only reason why I didn't mark it is because, one, we have a count reset because of these lows being the same. So it's a hidden second entry short. And it's the better trade anyways, is this failed second entry long. So from this, we have first entry long, second entry long, absolute failure. And the thing that tells me that this is just a consolidation and I don't think that we are actually trending higher is because the EMA is flat through the bottom of these candles. And we tested supply 1, 2, 3 times to fail it. And the reason why this is extra appealing to take this failed second entry long is this little gap that we have right here. This little gap tells me that we are done testing the supply zone and we're on our way back down to the range extreme low. So this is a golden trade. Out of this shortened downtrend, we had overshoot and we had a new low, which started our uptrend. Basically, from this new low, you are looking for a pivot back into the range. So basically, once we broke out of this shortened uptrend, you could have taken, and I did take this actually, so I think I took 4 trades today, this failed second entry short. From this uptrend break, you're expecting a new high, and you can expect the new high to be up in the supply zone to test the range extreme high. So you have a first entry short right here, which bounced the micro consolidation support, and then you have a jump up, and then a failed second entry short because it failed to go any lower that I took above here, took it for a scalp, And then we have a new high. Looking for shorts, and I took this failed second entry long slash second entry short. So we have first entry long on this candle, second entry long, which failed immediately, which also is a first entry short, second entry short, failure of EMA. So you expect it at the very least to come down and test this consolidation to see if we bounce out. Um, but I took this one for 8 ticks and got stopped out right here. My runner got stopped out right here. Another fail runner, but a good trade nevertheless. We have this gap, so you're putting all trades on hold to see if we're going to create a uptrend out or what, and we are still trying to figure out what we're going to do. Lesson of the day: be patient and don't be afraid to write new levels throughout the day, and be on the lookout for gaps such as these and such as these. All right, that's it for today. Trades left: 2 of my accounts up 1,000, 2 of my accounts up 315, 1, 2, 3, 4, 5 of my accounts basically at break even. Not a bad day. Not my greatest, not my worst. All right, see you next time.